Almost everyone thinks buying a home right now is out of reach. The headlines are screaming about interest rates and sky-high prices, and frankly, it's got a lot of people spooked. But what if they're wrong? What if a unique combination of factors has created a quiet opportunity for buyers, giving them more power and more financial help than they've had in years? This is the window of opportunity that the mainstream news is completely missing. In this video, I'm going to break down 3 critical factors that make right now a surprisingly good time to think about real estate, and I'll show you how to take advantage of it before this window starts to close. Before we get into the hidden opportunity, let's have an honest conversation about the cost of waiting. Because while you're on the sidelines, nervous about the headlines, 2 invisible forces are working against your financial goals every single month. The first one is obvious, and you feel it every time you pay your landlord: rent. For most people, it's their biggest monthly expense. And unlike a mortgage, that money is just gone. It's not building your wealth, it's building your landlord's. You are paying for an asset, you just don't get to own it. Year after year, rents tend to creep up, an escalator of expenses you have absolutely no control over. Waiting another year for the perfect time often just means another year of rent hikes. The second force is quieter, but even more destructive: inflation. The cash you've worked so hard to save up, that down payment you're proud of, is losing purchasing power every day. What your savings could buy last year, it can't quite buy today, and it will buy even less next year. This slow erosion is relentless. While you wait for mortgage rates to maybe drop a fraction of a percent, the price of the homes you want to buy may continue to climb, and your savings will continue to shrink. Doing nothing feels safe, but that's an illusion. It's a financial decision with a huge opportunity cost. You're not just missing out on a place to live, you're missing out on one of the most powerful wealth-building tools available. You're missing out on building equity, potential tax benefits, and most importantly, protecting your financial future from the very inflation that's eating away at your savings. Sticking with renting when you want to buy is like standing in the rain, hoping it'll stop, when there's a perfectly good shelter right next to you. So, what is this hidden opportunity I mentioned? What makes now so different? The first factor is something I call the money you don't see. While everyone is fixated on interest rates, they're overlooking a surprising wave of financial assistance designed to tackle the single biggest hurdle for most buyers: the down payment. Across the country, federal, state, and local programs have billions of dollars available in grants and loans to help you get into a home. These programs have been around for a while, but are often underutilized. And this isn't just small change. We're talking about programs that can offer tens of thousands of dollars. They generally fall into 3 categories. First, you have grants. This is gift money that doesn't have to be repaid. For example, the National Home Buyers Fund offers grants of up to 5% of the loan amount for a down payment or closing costs. Big banks also have programs like Bank of America's grant of up to $10,000. It's important to know these bank programs are often targeted to specific areas and for buyers who meet certain income limits, but they show what's possible. Second, you have forgivable loans. Think of this as a loan you don't have to pay back if you meet certain conditions. A common requirement is living in the home as your primary residence for a set number of years. The forgiveness period can range from 3 to 15 years, depending on the program. New Jersey, for instance, offers a forgivable second loan of up to $15,000. It's a win-win. You get help with your down payment, and in exchange, you become a stable member of the community. Third, you have deferred payment and shared appreciation loans. These are game changers. A deferred payment loan is a second mortgage with no interest and no monthly payments. You only pay it back when you sell or refinance. Then there are shared appreciation loans, like California's innovative Cal HFA Dream for All program. This program can provide up to 20% of the home's purchase price for your down payment. In exchange, when you sell the home years later, you share a portion of the profit with the program, which helps fund it for future buyers. While this specific program is competitive and runs as a lottery, Cal HFA has announced it will reopen in early 2026. On top of all this, you have federal programs like the Mortgage Credit Certificate, MCC. An MCC allows eligible buyers to take a portion of their mortgage interest as a direct dollar-for-dollar tax credit. This isn't a deduction, it's a credit that directly reduces your tax bill, putting more money in your pocket each year. This assistance is quietly helping to lower the biggest barrier to home ownership, but you'd never know it from the headlines. The second critical factor is the shift in negotiating power. For the last few years, buying a home felt like a battle against dozens of other offers. It was a seller's paradise. That frenzy has cooled down. For now. The higher interest rates of the past couple of years had an interesting side effect. They pushed the speculative, overheated competition to the sidelines. Today, the market is more balanced than it has been in years, giving buyers more breathing room and leverage. So what does this return of buyer leverage actually mean for you? First, you can negotiate on price. With less frenzy, homes are sitting on the market a bit longer, and sellers are more realistic. The list price is now more of a starting point for a conversation. In some markets, particularly in the South and West, buyers have more negotiating power. Second, you can ask for seller concessions. This is where it gets really interesting. A seller concession is when the seller agrees to pay for some of your costs. The most powerful of these is an interest rate buy-down. You can ask the seller to pay your lender a lump sum to temporarily or even permanently lower your interest rate. A 2-1 buy-down, for instance, means your rate is 2% lower for the first year and 1% lower for the second. This can dramatically lower your monthly payment in the early years. There's a saying in real estate, marry the house, date the rate. You can always refinance your rate later if they drop, but you can never change the price you paid for the house. A buy-down paid by the seller gives you the best of both worlds. Third, you can do your due diligence. The risky practice of waiving inspections to win a bidding war is fading. You now have more power to conduct a thorough home inspection and actually use the findings as leverage. If the roof needs repairs, you can negotiate for the seller to either fix it or give you a credit to cover the cost. This protects you from buying a money pit. This shift in power is a window. Forecasters expect that as mortgage rates continue to stabilize or drift down, buyer demand will pick back up and the competition will return. Buyers who are acting now are facing less competition than they've had in years, and likely less than they will in the years to come. They aren't just buying a house, they're securing a deal. The third and final piece of this opportunity is the most fundamental. Real estate remains one of the most effective and time-tested hedges against inflation. When you own a home with a fixed-rate mortgage, your biggest monthly expense, your housing payment, is locked in for 30 years. While inflation causes the price of nearly everything else to go up, your principal and interest payment stays exactly the same. You're paying for tomorrow's asset with today's dollars. Historically, property values and rents tend to trend upward, meaning your asset grows in value while your largest payment is fixed. Beyond that, home ownership is a wealth creation engine. You build wealth in two primary ways. The first is principal paydown. Every month, part of your mortgage payment reduces your loan balance. This is a form of forced savings, converting that money into home equity, an asset you own. The second is appreciation. While markets fluctuate, real estate has consistently appreciated over the long term. This is where leverage works its magic. If you put 5% down on a $500,000 home, $25,000, and the home appreciates by 5% in 1 year, $25,000, you've made a huge return on your initial cash investment. Now, this is a simplified example before you factor in costs like taxes and maintenance, but it shows the incredible power of leverage. Finally, there are potential tax benefits. And while recent tax law changes mean fewer people itemize deductions, for those who do, deducting mortgage interest can still provide a significant financial benefit. In a world of economic uncertainty, owning the roof over your head isn't just a lifestyle choice, it's a powerful financial strategy. It stabilizes your biggest expense, protects you from inflation, and helps build your net worth over time. Understanding this opportunity is one thing. Acting on it is another. So let's move from why to how. Here are 3 simple steps you can take today. Step 1, become a program hunter. Your first step isn't looking at houses online. It's looking for money. Open a new tab and search for housing finance agency, first-time homebuyer program, or down payment assistance. You might be shocked at what you find. Make a list of programs, their requirements, and their benefits. This knowledge is your biggest advantage. Step 2, get pre-approved with a program specialist. Not all lenders are experts in these assistance programs. It's critical to find a lender who specializes in them in your area. They can tell you exactly which programs you qualify for and what you can afford. This step costs nothing, but it gives you a crystal clear picture of your buying power. Step 3, assemble your team and reframe your mindset. Once you know your budget, find a real estate agent who understands the current market. You want a sharp negotiator who knows how to use concessions to your advantage. At the same time, reframe your own mindset. This isn't about timing the market perfectly. It's about time in the market. Plan to own the home for at least 5 to 7 years to comfortably ride out any short-term market noise and capture the long-term benefits. And a word of caution, be diligent. Program funds can run out, so act swiftly once you find one you qualify for. Always read the fine print, especially on loans, so you fully understand the terms. And finally, budget for the total cost of ownership. Not just the mortgage, but taxes, insurance, and maintenance. Navigating all of this can feel overwhelming, which is why I've put together a free, comprehensive guide on how to find and secure down payment assistance in your area. It lists top resources and the exact questions to ask lenders and agents. The link is in the description below. Let's bring it all back. While the headlines are designed to scare you into staying on the sidelines, a quiet opportunity is brewing. First, there's a surprising amount of financial assistance available to slash your upfront costs. Second, the negotiating power has shifted back toward buyers, allowing you to get better terms than we've seen in years. And third, the fundamental wealth-building power of homeownership remains as strong as ever. The legendary investor Warren Buffett said to be fearful when others are greedy and greedy when others are fearful. Right now, the market is full of fear. This is your moment to be strategic. Imagine 5 years from now. You could still be paying rising rent, watching your savings get chipped away by inflation. Or you could be in your own home with a fixed payment, having built tens of thousands of dollars in equity. You can look back and thank yourself for having the foresight to take action when everyone else was afraid. You can look back and thank yourself for having the foresight to take action when everyone else was afraid. So while everyone else is paralyzed by the noise, you now have the roadmap. This window of opportunity is open, but it won't be forever. The time to act is now.